Hello my fellow investment gurus, and welcome to the channel and to a monthly overview of our different models and of course a view of some of the news in the world. I have no doubt that you know and realize that there is a big conflict and war going on in Ukraine right now, started by Russia, and that is pretty much dictating the entire world. It has been a tough ride for the stock markets, especially if you are, of course, in some of the Russian stocks, Gazprom, Lukoil and Sberbank. As it says here, they are now penny stocks as Russian companies collapses in London, of course because of the Western sanctions hitting these stocks quite hardly. So there's no doubt that being in Russian stocks right now is kind of a crazy situation. I know some people that have bought in on Russian stocks because it was value stocks. It was deep value. Of course, before the war started, of course, no one had, I think, realized how badly that became. But it just it leads me to say that if you are a value investor, that can be absolutely fine, and the fundamentals are a good guideline on the long-term development of a stock. However, there's also something called a value trap, meaning that you have to consider, is there a reason why the stock is so lowly priced? It cannot really be that everyone in the market have completely overlooked the potential in this stock. Sometimes the reason why a stock is going down is actually that there is a reason, maybe one that hasn't come out into the public yet. So that is one thing about the value stocks. As you know, in our portfolios, we are momentum traders. That can be good sometimes, it can be bad sometimes. And in the current couple of months, it has been a kind of a struggling strategy. The reason for that is that in nervous markets like these, we are seeing that as soon as the stock has gone up, maybe 5 or 10%, people are taking profit off the table simply because they're nervous that things will go down again. Meaning that many of the stocks, and that could be in the weekly momentum here, many of these stocks, they are just giving us a buy signal and we are buying into them, and then the market is turning around. So that is also one of the reasons why these strategies have been struggling. However, looking at the markets, of course, first of all, we do have the oil market here, and that is going completely crazy. $115 for WTI. There have been some speculations out that the OPEC Plus would kind of ease up on their production restrictions. In the COVID scenario a couple of years ago, they put a lid on the production simply to keep the prices up, which was fine. And then they started to amp up the production with 400,000 barrels per day, and they did that once per month. And I think the Western countries had hoped that they would ease up even more, simply to bring the price down. But we must also realize that the oil-producing countries, they have had a hard time during the pandemic times, and they are really they're really gathering money into their accounts right now. And I guess that if the oil price hits 120, 130, maybe even 140 or 50, as some analysts say, then I think at least some of the Middle East country will get ready to ease up on these production restrictions simply to please the Western countries a bit. But that is all speculations. Looking at the, for instance, the Nasdaq, of course, the trend is down, but there's also something that I normally look for in a scenario like this, and there is, of course, lower bottoms here, but when we start to see a falling, the slopes are flattening out, then that could actually mean that what we are going to see now is not necessarily just a steep bull market, but something more in the area of this, where we are seeing the bottoms, they are starting to slope upwards. In my humble opinion, I think we have seen the bottom of the market right now. But again, in these war situations, depending on how everything develops, this can also take a leg more down. That is pretty much impossible to predict. And then, of course, it is nice that our models are not predicting. We are momentum and trend followers. And having a quick look at these, we can see that the momentum strategy here has taken a big drawdown here, and it has been hurting, but it is flattening out just as the market is. So we could hope that this is a time where we are shooting upwards. And right now there is a year-to-date return of 20% here. We can see here it has been some rough months here. We have seen that before in this strategy. However, we have not seen it 3 months in a row, and that is simply the interest rate scenario and now a war that is pushing it down. But I'm actually quite confident that the next 10 months will give us some possibility of gaining that back, so we can end up in green numbers for the year. Also remember, even though December was a minus 9.2%, the annual last year was actually 30.5%, which is absolutely crazy. The monthly momentum here, let's just have a look at that. We can see that year to date, that is only 16.7%. Also a tough time, but a lot better than the weekly momentum. And as we can see, that is also bottoming out, and it just reallocated here yesterday, I think it was, or maybe the day before. I'm losing track of the days here, to be honest. However, it is bottoming out here, and if we are looking at the last couple of months, not quite as steep a slope down, and we're also showing very slight green numbers here from March so far. We took a dive the first couple of days, and then yesterday was a very good day. Quarterly momentum, pretty much the same, but it will start to deviate from the monthly now, because the quarterly momentum is reallocating in a month on the 1st of April, and the monthly momentum model, it reallocated here on the 1st of March. So what can we see here? Well, basically the same as the monthly so far. We are up a bit more here in March so far, and the quarterly momentum is the one I like the most. I do like to give the stock some room to move in. All right, ETF strategies. We have the normal ETF strategies, the strategy, and that is down 13% this year. It's also kind of a record for the ETF strategy. It is a very conservative strategy, but it has had a hard time with the oil prices, interest rates, war, and everything going on. I must say, I have talked to several investors the last couple of weeks that are down 30, 40, 50% for the year so far, if they have been allocated into an unfortunate sector or something like that. And in that regard, our models are actually doing quite nicely. As you can see, it had a positive last quarter here. I think most people would have been pleased with that. But then, of course, we've had a rough start of the year, and it is down for March here. So no one knows where that would go, but it is the most conservative. And looking at the overall drawdown here, it seems to have bottomed out as well, but let's see how it goes here during March. Also, of course, depending on how the war goes, because if Russia finds some excuse for pulling out of Ukraine, claiming that they have won some sort of victory, or if the sanctions are biting them so roughly that they simply have to do something. Maybe some of the oligarchs are going against Putin, and yeah, there are a billion different scenarios, and the medias are all filled with experts saying, now I'm sure this will happen, now I'm sure that will happen. Basically, none of them predicted that Russia would go for the entire Ukraine. So again, be careful listening too much to experts. That is why we're using a completely rules-based models here. I think it's interesting to read the media, but it is not deciding what to buy and sell in these strategies. The last strategy is the ultimate dual momentum, that you know if you have followed our videos. And as you can see, that is actually the best of the models so far this year, only down minus 9.6%. This is a bit of a wake-up call, I can tell from many of our viewers, many of the people I write with, many of the investors that have only invested for, let's say, 2 or 3 or 4 years, they have never experienced a start of a year like this. So being able to say we are only down 9% or only down 15%, that is simply words that have never come out of their mouth before. But that is how it is, and let's see, I think we are turning now. Again, you can see the ultimate dual momentum. We started with that in December, took a tiny hit here, and then along with everything else, it is down for the year. So that is how it is with momentum models, and I think it's a good lesson that no strategy works perfectly in all market scenarios. You simply cannot find that, and if someone claims that they have found that and you can buy it for some price, well, I wouldn't say they're lying, but I've been investing since 1987, and I have yet to come across of a strategy that works perfectly in all markets. I would tend to claim that it doesn't exist. And right now you can see this sort of market with interest rates hikes, with war, with inflation, with possibly stagflation, maybe, meaning a combination of a recession and high inflation. Well, that is something that is rough on most strategies. So let's see where everything goes from here. The interest rates shot up yesterday. I would just mention that, and that was because the Fed Chair Powell, he said that even though there is a highly uncertain situation in Ukraine, they would definitely hike the rates, and I think that is reasonable since there is a 7.5% inflation in United States, as 5.8% in Europe with the numbers from yesterday. And today we are getting the PPI numbers, meaning kind of the inflation for production companies. And that is estimated to be 27% in a year, meaning that the cost for the companies have gone up by 27% in a year. And there's pretty much only one place they can put these costs, and that is on the consumer prices. So I guess the inflation will keep going up, even though the Lagarde, the bank chief of Europe, is saying that she's aiming for 2% at the end of the year. I can't see that happening, to be honest. That's all for now, and I'm looking forward to give you a big shout out soon. Again, we are doing some new research videos that we are looking forward to, and we are also coming up with some book reviews that I think you'll like. I'll talk to you again shortly. Bye for now. Take care of yourself and your money out there. Hi.